Thank you very much for attending the September Metals Investor Forum. It's been actually busier than normal summer. At Exploration Insights, we've been traveling quite a bit. Down to Florida for a retail conference by Rick Rule, down to Brazil, and then more recently to Colorado and Nevada for the Colorado Precious Metals Summits, and then also a site visit. So this presentation is just a bit of a summary of what I've seen in terms of where we are in the market. Definite focus on precious metals, as most of the junior companies are doing that. Yeah, hope you enjoy it and take something away from it. There we go. Okay, so I attended Precious Metals Summit, and I've been going to that ever since it started as a breakout from the Denver Gold Show. The current market, I mean, everybody is negative, but I mean, most of the pundits are talking about a major disconnect between the prices, where gold is flat in the US dollar to slightly up, but in a lot of other currencies is actually doing quite well. Big difference is that there's not a lot of ETF demand, which could spill over into equities. It's mostly central banks that are driving what's happening with the gold price. So I had the opportunity to sit down with about 30 companies. If you ever do this at Beaver Creek or any conference, it's nice to space them out, because if you try to do 14 or 16 companies in a day, like me, I'd be falling asleep by the end of it, and I'm not going to get anything out of it. So I've tried to space it out, and I recommend doing the same. I looked at a lot of exploration, developing, and producing companies. Just note that even though it says Precious Metals Summit, about 75% are precious metals, and they know what business is. And so when lithium's hot, there'll be a lot of lithium companies, which there were. When copper's hot, there'll be copper companies, and so the rest is there that can attract an audience. The mood was not cautiously optimistic amongst the precious metals guys. Some of them resigned to their fate with some green shoots, sort of like with the bag over the head and the last cigarette sort of thing. And some people are looking to go private because some of the funding now is changing. And so before, Chinese funding and that was not frowned upon. Now it's harder to do, politically. And so a lot more money coming from the Middle East. And I know of a company that I met has really started to look at going private and just doing joint ventures with them because they can be guaranteed funding and they don't have to go to the equity markets anymore. So there is a bit of that. And take it as it is, but I mean, it might be a sign that this is the bottom, but we've said that before. Okay, so while attending this, what we got to realize is that it's not Mount Everest. It's not 8,900 meters. It's not even Kilimanjaro, which is about 6,000 meters. It's about 2,500 meters above, let's say, Vancouver, where most junior mining people reside. If we use the TSX Venture, I bring up the altitude only because you have to walk around a lot in the Precious Metals Summit. Because they have so many companies, they create venues all over the place. And just going 300, 400 meters in the 10 to 15 minutes that you have between meetings, if you're not used to elevation, it can weigh on you. And that's what this talk's about, is about oxygen as capital. And so if the TSX Venture is a barometer of the junior mining sector, there's been about a 60% decrease in IPOs year to date to August. And also importantly, there's a 90% reduction in the amount of funds the IPOs actually raised. So another indication of where we are and an accurate reflection of the sentiment at Beaver Creek. Total amount raised in secondary financings, IPOs, and what have you, 3.2 billion was about a 30% lower than the same period last year. And so the way to think of it, like the way I think of it, is basically if someone is in this environment of low atmospheric pressure, it's good to have an oxygen tank. That way you can not only function, but you might actually be able to climb. The other thing is that there's also companies that, even though their working capital might be low, they've got tanks of oxygen at their base camp, so they're okay. So you want to look for companies like that as well, because we're not sure how long this period of stagnation or negative sentiment against precious metal equities is going to last. So those are two important things to consider before you think that this is the bottom and you want to start investing. And so this is basically, I looked at the range of working capital in all the companies within the portfolio. No names there, that's subscribers only. But what's interesting, is there's a parallel there between this low atmospheric pressure, weak capital markets, your body's ability to absorb oxygen, causing pulmonary or cerebral edema, or the company's ability to generate news flow. Very similar. I mean, it takes me back to, 30 years ago when I went up Kilimanjaro. We were up almost at the top, and the Australian guy with me started seeing people on the side of the mountain trying to sell camels. There were no people on the side of the mountain selling camels. So we had to get them down really quickly. And so if you encounter a company with a delusional strategy, probably best to avoid right now. I mean, pick those companies with well-funded strategies, because this period, we don't know how much longer it's going to last. So the 20 to 25 companies within the portfolio, I mean, even though the average of the working capital looks decent at 25 million, when you look at your own portfolios, you'll have a big range. One from negative 14 up to 140 million in terms of working capital that I got. But just note that one company that's got a big working capital position might have big plans such they need all that money, whereas somebody else who's got a lower working capital position but more modest plans might be better off. So it's always a good idea to look at the burn rate and then see how much time they have if they basically adjusted the dimmer switch in terms of their plans. And so the strong treasury usually generates more news flow. Working capital supports, hopefully, value-adding catalysts, including drilling. The problem is that right now in this market, people want out. So when there is an upcoming catalyst coming up, they use it as a liquidity event, and we've seen that over and over again, where a nice scoping study comes out, but nobody cares, but they're waiting for the liquidity to sell their positions. Most companies at Beaver Creek paid about 12 grand to attend, and probably another 10 or so more in terms of accommodation and travel. And that's all about getting meetings. And the Precious Metal Summit has grown with respect to the amount of corporates that attend. So not only are they getting meetings from investors, it's about 50%, if that, then you have the equity analysts, you got the newsletter writers now, and then you also got corporate reps from companies. And I worked in corporate development for Newmont, and I mean, a lot of these guys are just doing their job, kicking tires and stuff like that. But that could change. But they want to know who's out there. So my portfolio right now, and you should do the same, look at the catalysts. Look at what these companies are actually going to generate. Right now, I've got about 360,000 meters of drilling coming from those companies. So I'm looking forward to what's going to come out, because the market right now still appreciates good results. So that's one thing to take away. And so what I'm going to do now is just go through several examples of what's working, what may not be working. So the first one was around the Precious Metal Summit, between the Precious Metal Summit and Denver Gold Show, a company called Reunion Gold. I visited it late last year. Advanced Gold Explorer in Guyana Shield. Their big project is Oko West. So during the Colorado shows, they raised $70 million in a bought deal. 46 cents per share, importantly, no warrants. So that means there's demand. Price discount 20% to its 52-week high, which it just did about a month ago. 60% premium to its 52-week low, which also was the same year, obviously, but it was only in February. And then a 6% discount to its 20-day VWAP, a volume-weighted average price. And so that's important to notice that they're almost getting it at the money with no warrants. So there's a lot of demand, and this deal was upsized. So that, well, it's not had been upsized, but everybody tells me that that 15% green shoe is going to be filled. So they've got $1.2 billion shares if this green shoe is filled. The reason that's underlying the demand is this Onyx Gold project, Guyana Shield. Guyana's a good place. There's infrastructure, English speaking. They're getting a lot of investment in oil and gas right now, so the economy is going. The gold here is associated with quartz carbonate veins, potassic alteration. You get some high grade, you see at the bottom there, 35 to 36 grams per ton gold. There is pods of that, but really it's a bulk tonnage resource that they just put out over 4 million ounces at about 1.9 grams per ton in open pit. But what they want the money for right now is they want to get bigger. And so on the side, they had a joint venture with Barrick on a lot of their ground. That agreement they thought was done and dusted. But as they found this and they want to expand this, Barrick has come back and said that the deal is actually not done. It does not apply to Oko West, but if they want to grow outside of this, Barrick is saying that that 70-30 joint venture still applies. And so there's a little bit of an overhang and it's going through the courts, but that's something else to consider if you're interested in this. Again, big open pit, high strip, good metallurgy, in a good jurisdiction. So that's what's attracting attention. Problematically is, does that 70 million that they just did suck all the air out from the market with respect to everybody else? That's the question. Because again, there's not a lot of air out there. Okay, another one that we have right here is Labras Gold. They traded up 750% from their 52-week low in late July. And this was based on a long gold intersection, open pitable grades. And then they did a private placement. That private placement, jumped to about, they went from 10.8 to 13.5 million. Importantly, it was done like $1.35, but no warrants again. So a lot of demand, good indication of demand. 575% increase from their 52-week low. 21% discount from high at about $1.70 and a 6% premium to its 20-day VWAP. So just around that 20-day volume weighted average price. So that's good. And so they increased their share count by about 24%. And so why did that happen? So the projects in Brazil, I've been to Brazil several times over the last year and a half. It is a great jurisdiction with respect to infrastructure, power, water. And they got this intersection. It was on a blind deposit. So as you look at it, there's these northeast faults. And so this block is down drop. And so there was no surface expression of this. And so people like that when you find a blind deposit, and they did. And so they drilled 340 meters of about 1 gram, but within that, they got about 160 meters of about 1.8 grams. What it looks like is it's intrusion hosted. But there's a very rich alkali component that Mike will get into in more detail. But though that one, this one right here, I mean, that graded about 6.9 grams over a meter. So again, blind discovery, not trading before it. The intersection came out and the demand was there. So that does, these are the green shoots of this current market, in that if you do find something, there is money out there. And the demand is such that you don't have to issue warrants, which is important. Another one, Onyx, as well as here with Brock Coulter-John is here. It was a spin out of High Gold. That's why I had a piece of it. Big land package in eastern Yukon, 210 square kilometers. And this is an area play. So it's proximal to Snowline, which has a really nice market cap of about 650 million, which they've basically been able to hold. I met with Snowline as well, great management team. It upsized, so Onyx upsized their private placement. 50% was hard dollars, and flow through. Again, this is in Canada, and they upsized it by about 67% to 8.3 million. Hard dollar price of about 50 cents. They did issue a warrant. And since then, it's been trading at or around the hard dollar price since listing, because people are waiting, anticipating the drill results. And so what is it? They've got ground. Snowline's up here. That's the Valley Discovery. And they've got a big land package around here that was spun out of High Gold. And most of the focus is here, which Brock will get into. But basically, people are waiting for those 8 to 10 holes about 2,500 meters at these two prospects, Golden Mask and Main Tut. And when I met with Snowline, you know, these are big intrusion-hosted deposits, but we've seen a lot of these big intrusion-hosted deposits that don't really have great grade. But, you know, obviously Snowline does. And there's a difference there that they seem to be seeing polyphase intrusions, strong bismuth and telluride association. So as we look at the results from Onyx, that's basically some things that I'll be looking for when I look at it. And there are biotite-rich feldspar porphyries apparently associated with the higher grade zones of Snowline. So that's in the value discovery. So those are the sort of things I'll be looking for as I look at the results from Onyx. It's not cheap to drill there. So you want to be well capitalized to work in Alaska or the Yukon or the Arctic. Right now, Snowline was telling me that their costs are around all in about $800 per meter, including the camp and everything like that. So another one would be producers. What are producers doing? So Equinox, during the gold shows, they ended the first half of their year with about $320 million in net debt. Net debt just means long-term debt minus their working capital position. So what they did was they had $140 million of convertible debt due in April 2024 as they're building the Greenstone gold deposit in Northern Ontario. So this original convert that they were offering was at $150 million. They managed to upsize that to 172. For them, which was good, they got a lower interest rate, which is very important, 4.75%. And lower conversion rate, again, important. And now they pushed back the date from 2024 to 2028. So that all is positive for the company. The conversion price is about a 35% premium to their 20-day volume weighted average price. So that's not huge, and it's a long sort of option because it goes to 2028. And so in the meantime, like in the background, you know, we heard the problems with Magino, Cote, and that with these big low-grade open pit deposits in Northern Ontario. What's important, I haven't heard anything about Greenstone because they seem to be doing it pretty good with G mining. 85% of the construction is complete. 76% of the funding has been spent of the $1.2 billion. So it's all been going pretty well, but they still have another $177 million to spend. Hence the reason to do the convert, because otherwise they would need money in 2024 to give back on the convert. So positively, for all the inflation we've been seeing, they've had favorable foreign exchange rates and savings offsets that they've been putting in that have offset any inflationary pressures, which has maintained their capital estimate. Interestingly for me, as I was reading through their financials, they've actually put in gold collars. So a form of hedging. You sell up, I used to do this at Phelps Dodge, but you sell a put and buy a collar, and that's the range the price can be in. But if it's below that price, you still get whatever, 1900, 1950 gold. It's above that price, 2065 or 2250, you get that price. So if you're looking for leverage, there's some ounces here for Equinox that are not levered. In terms of financial acumen, it's good to do this if you are spending capital because you want to make sure you get that kind of cash flow. And you know, it's wise to do it, but in terms of leverage, there's a little bit of a constraint. Not huge, 10.6 thousand ounces and 3,000 ounces to March 2024 every month. And so this is a company I visited. It's a company in the portfolio, is I-80, multi-asset portfolio in Nevada and production. And, you know, there's not a lot of companies now in Nevada that produce or hold refractory gold processing facilities. I-80 does. I-80's management team actually sold their company, Premier Gold, to Equinox for about $480 million US, and that was basically for the Greenstone project. They ended with a net debt position of about $152 million, which isn't great for a non-cash flowing, well, they are cash flowing a bit, company. But to support its balance sheet, and it has access to capital because it's got partners, it's selling about 13.3 ounces forward from 2024 to 2026 for $20 million. So effectively, they've sold gold forward at a price of $1,500 because they do not want to go to the equity markets right now at this level. So what do they have? So this is what I saw when I was there. I visited 3 of their projects. Granite Creek is where they're actually producing 400 tons per day. They want to get to 700. It's, you know, high grade underground, but they have a processing agreement until they get their Lone Tree autoclave going to supply, to basically process that at Twin Creeks, which is right next door. The Cove open pit was mined previously. They're going underground on that. And so this is the stuff that we were looking at and what they were drilling. And so this is the Favret limestone. What you want to see is the black stuff, and that's usually where the gold is. This is interesting because this is at Ruby Hill. Ruby Hill is Carlin, but it's also CRD, carbon replacement deposit, but it's also skarn. And now they found something really weird. Looks almost like a high sulfidation epithermal system. I'm not convinced because it doesn't make any sense where it is, but it's definitely not those 3 other things. So what's interesting about Ruby Hill, there's a lot of things going on there. And what's happened with Ruby Hill is it's forced them to take a second look at what they actually want to do. So one scenario is developing a bunch of high-grade underground refractory gold mines that feed Lone Tree, and or take the existing facilities at Ruby Hill and developing a base metal processing facility there. So lots of things to think about. But again, retail doesn't like development. Another one that's in advanced exploration development that we have in the portfolio is Liberty Gold. And this has a moderate strip, open pit, run-of-mine, heap leach. And it's important with respect to run-of-mine versus crushing. Because crushing is more power, more cost to get the same kind of recovery. Run-of-mine, you just mine it and put it on a heap. And so it's lower cost. So if you want to look at an analog for this would be Marigold, which has got about 2 million ounces of reserves, 0.48 grams, but Silver Standard makes a lot of money, or SSR Mining makes a lot of money off of it. So they did an equity transaction, 5.7 million, 34 cents per share. No warrants, but most of this was done with Wheaton. And so this current environment is very good for royalty and precious metal streamers. That will be a source of capital. And those guys have probably taken the most meetings. So recent pressure on the stock, and this is something else to look at that happened during the Precious Metal Summit. I don't know if they'd like to do it like that, but there was a lot of pressure on these companies with respect to the GDXJ. So it used to be 5+ years ago, people wanted to be in this index because they get more liquidity. But the problem with being in this index is they basically loan their position out. And so if you couldn't have a short position because you're not liquid enough, they can create a short position for you. So that's a problem. And also, if they can manage your position, and so if your company, the market cap is down and you can no longer be held by them, they'll dump your stock. But for 2 to 3 weeks before that, when they announce that they're going to do it, funds, traders will all be selling your stock in anticipation of your removal from the GDXJ, and that's what happened to Liberty. Okay, and again, this large, low-grade run-of-mine open pit that I visited a couple of years ago, right now they're still drilling 32,000 meters. Their goal is a PFS in Q1 24. Again, retail doesn't like development. These are orphan projects, but eventually intermediates and other companies will look at deposits like this with 3 to 4 million ounces in a decent jurisdiction in southern Utah. That might be a takeover candidate. We got to wait for that right now, but that's basically what we're sitting on here. So to conclude, current market conditions, basically mostly for precious metal companies, very weak. Similar to the lack of oxygen and altitude. TSX Venture basically raised 28% less than last year. I told you about the IPOs. Working capital and access to funds, very important. So if you want to get into where you think it's bottomed, you got to make sure that these guys have money. There's no point in investing right now if they got to raise money within the next 2 months. recent funding is very specific to companies, and most of these ones that are raising money are exploration stories. Not a lot are raising money that are in development on favorable terms. Producers have more options, and we've seen convertible debt, and also SSR Mining did a big debt offering as well. The problem with the second half that we got to watch with producers, and if we're thinking more M&A, is their own working capital and cash positions, because $80 to $90 oil will impact their margins. All right? Thank you very much.